Traders Workshop, where we bring in NinjaTrader ecosystem experts to help you improve your trading. My name is Tom Schneider, CMT with NinjaTrader. Really excited for our next guest. Before we get into that, I do want to remind everybody that futures and options trading contains substantial risk, not for every trader. You could potentially lose all or even more than all of your initial investment. That's why we recommend using risk capital. What is risk capital? It's money you can afford to lose. It doesn't extend your retirement horizon or change your lifestyle. Also, I want to remind everybody that past performance is not necessarily indicative of future results. And what we talk about here in this program contains neither trade recommendations nor financial advice, but should be taken for educational purposes only. And it's with that out of the way, it is my pleasure to welcome back Chris Tubby from Symax. This is Chris's second appearance. We're really happy to talk to him today. How are you doing, Chris?
I'm good, thank you, Tom, and it's a pleasure to be back as well. Really looking forward to it.
Oh yeah, this is going to be a great show. It's a really interesting day today. I'm sure those of you watching the markets here in the U.S., and I say the U.S. because, Chris, where are you located?
I'm in the UK, but, you know, at the moment, we're all looking at what's going on today in the US with the midterm elections. Exactly.
It's election day. So markets, really interesting trading today. We'll take a look at some of that as we talk during the show. But Chris, before we jump into it, can you just give us a little bit of background, a little bit about how you got into the industry? I know you've got a wealth of knowledge. Where did you gain that? And how did it bring you to Symax?
Yeah, so I've been in there. This is my 50th year actually in the markets. Trading wise, 47 years. But I started off in the commodities. So when they arrived in London, I sort of I love numbers anyway. I actually, you know, sort of my initial thoughts was to become an accountant. But after 2 days in the markets, I just knew that was what I wanted to do, basically, for a career. And I've done it ever since. So I'm pleased I stuck with it. But so I mean, I used to trade the soft markets. They were the first ones in London, really. And then moved across to the financial markets when they came around in the futures, that is, in 82. And I stayed working for companies until sort of the mid-80s. And then I decided that I'd venture out and start my own company and become what was then classified as a local, you know, just trading my own account. And I've pretty much done that ever since. So, yeah, probably about 35 years as a sort of a prop trader. Including in that, I've done market making for various exchanges and some really sort of random markets as well, you know, like iron ore and such like, and MSCI. And I spent a few years in Italy working inside an Italian bank as a market maker as well. So, yeah, and traded lots of other commodities. And these days I trade everything. So all the different asset classes. I've even spent a few years trading with crypto. I moved a lot of my coins last year, thankfully, into the metaverse because I could see that as an opportunity. And probably for about the last 10 years, you know, I've included the educational side as well. I was a senior trader at 22. So when people say, you know, how long you've been teaching people to trade? Yeah, it's almost all my career, but it's different now, as you know, with it all being electronic and all that, it's completely different. And of course, access has changed as well now. It's much easier for everybody to access the markets. And of course, that's a sort of a double-edged sword. It's a good thing, but it's also a bad thing because, you know, there's so many people that jump into the markets and risk their capital before they're ready.
Well, and I think you hit on it, right? It's a new technology. I would say YouTube is being one of those defining technologies where all of a sudden you've given everybody who has a camera a voice, and that can be, like you said, good or bad, right? So the dissemination of knowledge has become cheaper and more available. But what is the, you know, it's just like anything else out there. You have to vet that information.
Yeah, you have to know whether it's quality, reliable. You know, someone can sound convincing, but when you look at them, they've probably got 5 days or 5 months of trading experience, but they just think because they've had 2 or 3 winning days that they're suddenly a trader. And as we know, that it takes a lot longer than that to actually sort of hone those trading skills to get to a sort of professional level at least.
Chris, you mentioned you got in through commodities trading. Can you tell me just a little bit, because I always know, when you get into the business, you always kind of have a soft spot in your heart for what you did first, right? What you started trading and got you to love the business of trading. What exchange were you trading at? It must have been in the pits, right? So where was that, and what contracts were you trading?
I mean, this really was before pits. I mean, it was just like a giant room with, like, if you think of the old, especially the English, like the telephone boxes going all the way around the outside. There was only sort of 26 members of coffee. So all the business for London came through 26 companies, and that was it. So it was, it was not closed, but it was very niche markets at the time. But the first market I ever traded was cocoa, and I really enjoyed it, actually. And when I got into the markets, because it was the early 70s, it was just before the first real commodity boom started. Prices were in the 200s when I first started, and by the time I sort of went to work for a company about 18 months later, because initially I was working for the exchange, the price had doubled. And of course, we've seen this year the way that commodity prices have been so volatile and ramped up as well, especially sort of gas and oil prices. But, trading the soft market was great. And it opened up, it gave me time to sort of learn my trading skills as such. I mean, we was given accounts where we could trade on behalf of the company, but we was responsible for the revenue that was created in there. And I ended up working for what was one of the biggest trade houses in the world. They don't exist anymore, but they did at the time. And I probably used to do up to about 30% of the coffee volume each day.
Wow, that's really impressive. And you mentioned in 18 months price had about doubled. Did you find it easy, when things are going well like that and prices are up, it's easy to be a trader then, but really, you have to hone the other side of it. Obviously cocoa prices must have come down since then. You were out of the cocoa market by that time? Were you going into different markets?
I was into coffee by then. Okay. I went to cover a guy in coffee for a couple of weeks while he went on holiday. And I was just trading around with his account for a couple of weeks. He only had a really, really small position, but he didn't realise he had it. And at the end of the 2 weeks, the director said to me, he phoned me down. He said, have you been trading? So I said, yeah, I've done loads. But he went, no, have you been trading like Mark's account? So I went, well, I had to do a little bit. So I just thought I'd just sort of test the market. So he said, do you want a job? And I ended up working in coffee. So and I loved it. And to be honest, I mean, some traders are neutral. Other traders are either bulls or bears, doves or hawks these days. They've got that sort of bias in the market. I've always been a bear. I've always been a dove trader. I've always loved to sell a market. Psychologically, that's important as well. Whether you got to know what type of trader you are when it comes to that. But my old boss was a bull trader. So his philosophy was, if you was bullish, you could buy as much as you like. If you was bearish, you could just buy less. So you've got to think about that one a little bit. But it worked for him because it sort of in the mid-70s, there was a frost in Brazil. And again, this is one of the things to remember about commodities. There is a sort of finite amount of product, and it wiped out sort of over 30% of global exports for the year for coffee. And the price went from £400 a tonne to £4,000 a tonne.
Oh, wow.
Yeah, it was huge.
That's amazing.
Yeah, my old boss did very well on that. That was probably his best year ever. But, that was a classic. But and then over time, prices come back down again. I mean, if you look back at oil when it first had that really massive spike, 2008, and it made the all-time highs, WTI especially. Within 6 months, it had gone from $147 back down into the 30s. So we do get these spikes, and you know, they're justified at the time, but then the markets correct themselves over time. You get that
Well, and
balance.
that's what's so amazing about the commodities versus any other market, right? Where there's not only the physical aspect of it, and there's a supply and demand aspect, but there's also transport, there's also storage, there's also, you know, different aspects of transport too. Where does it have to go from and get to go to the next process? Is it something you can deliver straight away, or do you have to refine it? Do you have to distill it? All of these things, you have to crush it, right? All of these things factor into commodity prices, which you don't have with the share of Apple stock, which you don't have even with an E-mini S&P future.
Yeah, no, absolutely. And you know, sort of logistics come into it, definitely. I mean, if you think back to sort of 2020, when OPEC increased supply when they were supposed to cut because Russia wouldn't agree to the cuts. And at the same time, we had that demand destruction from COVID, and WTI futures went negative to almost $40. You know, and why would that happen? How can that happen? But, you know, as you was talking about storage and such like, everywhere was up to capacity. There wasn't anywhere to actually store the oil.
That's right. That's right. And I worked for my previous job. I worked for somebody who did some analysis, and he actually, in his analysis, would have said something about a negative price, but he said, no, I just can't go out there and say that. And it turns out he probably would have been right, based on exactly what you were saying was the storage. There was no place to put the crude oil.
That's right. And you know, you get these carry trades where you can hold on to the longs into sort of the future months and all that, but only if you've got somewhere to store it. If storage is full, and it doesn't matter whether it's oil or whether it's soybeans or wheat or anything, that you get into that situation where you want to buy it because you know it's cheap and you know the price has got to go up almost, but at the same time, if you've got nowhere to store it, then it's very difficult.
For sure. Now we've veered off a little bit. I love talking to hear more about what you do and your experience. But with what's going on today here in the United States, let's talk about election. I've got a chart of the E-mini up, and this is a daily chart. Jason, I don't know if you want to share this. Mission control, as we say. By the way, if you're watching on YouTube, thanks. Appreciate the thumbs up. Appreciate hitting the subscribe button. But if you want to ask Chris a question or ask me a question to ask Chris, you can go to ninjatrader.com/events, and when you hit click play, you'll be able to join the chat room. Put a name in, put a question in for Chris. I'm sure he'd be more than happy to answer that. But looking at elections, today is election day. And of course, every election is the most important election in your lifetime, right? It's always kind of the same tagline. And, at my age, it gets kind of, okay, been there, done that. But, there are things that could change. And one of them being the biggest, I think, the spotlight is the change on the House of Representatives in the United States and the change in the Senate, one or both. Do you have any opinions on this? And what are you maybe you're talking to your clients about?
We don't actually deal with clients because we're proprietary. But okay. the thing there, I would say, is that we could end up in this situation, or you guys could end up in this situation, but it does impact the world because of those sort of decisions that would come through from that. Whether the Democrats can retain both, and of course, inflation is going to be the major bugbear for the voters. You've got this situation where, to be honest, the chance of the Democrats holding on to both are very low. And you've had a lot of big players, talking Blackstone, Oracle. A lot of those guys have come out and added their political weight, if you like, and contributed to the battle, if you like, between these guys, the Republicans and the Democrats, for control. And they've put their hand in their pocket to do that. Mainly for the Republicans, I would say. Now, when times aren't so great, everyone blames the government anyway, whether it's right or wrong. And of course, that impacts the voting. And of course, you've got the Democrats that may not go out and vote because they're comfortable with the way things are. You've got the Republicans that want the change. They want to try and sort of force to get more people in, more politicians of theirs back into office, and that they will make the effort to go out and vote. And that's always a danger when you come up to these types of elections. The people that don't bother to vote because they think it's a done deal, and the people that want change.
So, in lieu of that, it seems to me the turnout for the party that's not in charge might be elevated, and the comfort of the party that is in charge, there might not be as many participants as you would say if it were reversed, right?
Absolutely.
So when Republicans were in control, certainly when the Republican president, Democrat vote was amped up. Let's say it was, certainly more money from the Democrat. Well, maybe every year it seems like there's more money than the previous election cycle. But really we've got to get the vote. We've got to make change. It seems like change is the key thing here, but the markets, they don't want change necessarily. They want certainty, right? They don't maybe not want change or not want change. They want certainty.
Well, this is the problem you could end up with, which is almost going back to sort of Obama's situation, where you're the governing party, but you lose control of the houses, one or both of them, and it sort of neutralizes you. And then the only thing Biden's got left then really is executive orders to pass anything, or he's got a horse trade. And of course, if the Republicans get back in and sort of have the majority, then there's a good chance that they could sort of water down or completely destroy some of the policies he's trying to push through at the moment, especially sort of like the green policies and such like.
What is the market, in your view, what does the market think of those green policies? And we could talk about energy markets, right? Energy markets are definitely affected by those green policies. But what are you seeing there? Well,
the thing, we all want to save the planet. We all want it to be perfect, and we want to get away from fossil fuels and carbon and everything. The problem is the price, the cost of it all. It's it's probably tens or 100 trillion to do that for the planet, and that is the problem, because everybody wants it, but nobody wants to pay for it. And of course, oil companies are being criticised. They're making record profits at the moment, but they're not reinvesting that, or they don't look to be reinvesting it. But why reinvest in oil when it's effectively got a shelf life? Okay, the Russia-Ukraine situation has prolonged it, and it's brought it back in along with coal. Carbon's come back in Europe because of the desperation of replacing Russian gas. But overall, even the oil companies are looking for those alternative green energies to replace their oil, because they know over time that they're not going to be able to sell it. More importantly, they can't get the investment into them from investors. Shareholders don't want to invest in them all the time, that they're still pushing and promoting things that are destroying the planet, or considered to be destroying the planet.
Interesting. So we've seen a lot of volatility in the energy markets, crude, natural gas, for the reasons you mentioned there. These policies that each side has, I'm going to call them sides for lack of a better term, Dems and Republicans, they have different views. They have vastly different views on the energy market. It seems to me that if while we all want the planet to be healthy and green and whatever, it seems the timing is the issue here, right? There's one side that wants to force it, and the other side that says, that's a good goal, but we have to be realistic. If that Republican side does come into power, what happens to energy?
Well, yeah, I mean, Biden. You can correct me if I'm wrong, but Biden seems to have been very much anti-fracking.
Sure.
And it was the fracking that really took the US from being a quite a considerable importer of oil to actually turning it around to become an exporter of oil. So, that played a big part in that. So if the Republicans get back in, again, they could start to turn around some of these things. And of course, this vote is not just about who comes back in now, but it's going to lead up to, is Trump going to stand again in 2024? Because I think, the outcome of these midterm elections would probably define him and decide for him whether he will or he won't run in 2024.
Yeah, I think, and that question is going to be on, I think, of the tip of a lot of people's tongues right after these elections are decided, because what I hear is he's making an announcement mid-November. Love him or hate him, whether you want him to come back or not, he will be in the forefront, right? I mean,
you got to admit, it's great for the markets.
Well, and that's an argument, right? But he's definitely a polarizing figure, and we'll see what happens. I think we have to get past a couple things before that, right? We have to get past the elections. We have to get past the elections. Then we have CPI coming out this week too.
Yes, we do. And before the next central bank meetings, we've got 2 more sets of inflation data and 1 more unemployment set of data to come out as well. So the middle of December is going to be really exciting, and the build up to that, because it now it's a case of we've had all these massive increases in interest rates. Of course, in my opinion, they're going to continue, but they may get watered down a little bit. I mean, so the central banks haven't really seen the impact of that feed into the data yet, and they can't keep ramping up 75 points for the next year or two, because it would be ridiculous. But to be honest, in my opinion, what's been ridiculous is having 0 rates at any time anyway. I just don't think they work. I've always said that quantitative easing is the easiest way to sort of counter a crisis, not necessarily the best way.
Well, that's certainly what we've been. I mean, there are people in the market who their entire career, let's say, have been about quantitative easing. They haven't, kind of been trading, or they haven't worked in that environment where, before QE, right? Before 2008 or 2009, whenever that started.
Yeah, I mean, a lot of the guys that are fairly new to the market, I mean, all these millions that joined over COVID and all that, but you can go back a decade or even 2, and you still haven't really seen big interest rates. You've got to go back into the 80s and 90s to see sort of the 12-15% interest rates that I've seen. I remember buying my first house, and when I bought that, interest rates were 12%, but inflation was pretty much correlated to that. It was pretty much the same. And then over one lunchtime, when the Bank of England was trying to support the pound, they put rates up 2% just over lunch.
And that's unusual. I mean, we haven't heard of that, right? We're amazed at the 75 basis points, 2 consecutive meetings, and I think that happened in England too, currently, right? Or Europe? The ECB
that's right. Yeah, but I mean, in the US, it's actually been 4 now, so that's right, amazing, right. Which is a record. But being as old as I am, I've seen all this before, and that's the great thing about trading is you may get whatever impacts the markets may change, but the reaction of the markets doesn't change that much.
So with what's been happening here as far as central banks compared to, let's say, England central banks, European Union central banks, in Japan, where do you see the comparison of, let's say, where we are in terms of recession risk for those areas?
Well, I mean, the US was in this technical recession, which is crazy when you've got the strongest economy on the planet. So it was a ridiculous thing, really. And it makes you sort of question, what is a recession these days? What should constitute a recession? Perhaps we should think that, because economics has changed so much over the last decade or so. that, perhaps some of this should be rewritten, and the central banks need to sort of look at this, and the governments. But you guys are in such a strong position still. And the point with that is because you're fairly self-sufficient. Energy, food and all that. I mean, you can pretty much get by. Yeah, you import a lot, you export a lot, actually trillions. But overall, I mean, if you was cut off tomorrow, you could practically survive where pretty much the rest of the world couldn't. And I think, obviously, with Russia invading Ukraine earlier in the year, that had a massive, massive impact on Europe and the UK, obviously, as well. And that's still ongoing, obviously. That war's now in its 9th month. And that doesn't look as though it's going to end any time soon. I mean, the Ukrainians have fought back brilliantly. When Russia first invaded, I pretty much, I put my hand up and say I thought it would all be over in a week. But look at it, it's amazing. But it has had a massive impact on the markets. You look at what happened to the grain prices, look what happened to the energy prices, the gas prices. All of it took a massive, massive spike. And yeah, they've come down, but they still haven't got back to sort of pre-war levels. I mean, sort of containers and that sort of area have, but not overall. And of course, when we're sort of seeing all this, and then go further. So we're all stimulating our economies. Sorry, we're not. I mean, we're cutting back on all that. But then you've got China and Japan that are still stimulating their economies. They've been cutting their rates in China. Japan's just left theirs. They're still negative, minus 0.1%. But they're still adding money into the system. They are seeing a little bit more inflation now, though. They're up to about 3.5%. And of course, inflation is the big thing, isn't it? This is why we're seeing all of these things happen in the markets, why we're seeing these central banks hiking their rates so much, because they're trying to get, first of all, it was to try and play catch up. And then after they play catch up, now it's a matter of trying to get ahead of inflation. But the problem is they can only control or try and impact the demand side. But the majority of inflation's been caused from the supply side.
Yeah, and it seems like there's a spiral happening there, right? When they're tightening or they're raising of rates hasn't affected the inflation rate as much as they thought it would, or there is a lag there too, so they have to be careful about that. And they're concerned about over tightening. We hear about over tightening. I don't think it's a science that's very precise, first of all. And like you said, the demand versus the supply, it's really coming out of COVID. It's just an unusual time to think that the Fed can use the same tools it's had historically and try to fix the problem in the same way and get the same results when we have very different reasons for inflation this time.
Exactly. When it's demand driven, then, what they're doing is the right thing to do. But when it's supply driven, then it's much more difficult. But, they just don't have any control over that. And they're putting the rates up. For me personally, I don't think that the central banks have got any choice other than to create recessions. By forcing countries into recessions, it gives them a chance to reset the economy. Because what you're going to do is where you've got sort of supply down there and demand up there, you're going to see demand go down there and supply is still going to remain. And then the supply is going to have to drop their prices, which is going to bring inflation down because demand's disappeared. You've during COVID, you had the central banks and the government, monetary and fiscal policy working in unison. But now what you're seeing is they're almost on opposite sides. The government wants to keep stimulating. They want to keep everybody employed. And of course, again, the US has got amazing employment record at the moment. And there is still this shortage of workers everywhere, which again adds to inflation. But overall, I just think that, inflation is very difficult for the central banks to have any control over from the sell side or the supply side. The only thing that they can do is try and damage, or in my mind, destroy demand, to bring everything into a recession, reset the economy. And I think, an important point here for everybody is that, we're seeing these rates go up quickly. Don't expect them to come down quickly, because it's not going to happen. They may slow down these increases, and then they may sort of stop and take a sort of sit and wait and see the data coming through to how the markets and supply and demand are starting to rebalance. But if that inflation starts to come down, we've got to remember that their optimum level of inflation is 2%, and that's a long, long way off. Now, if it gets down there, does that mean that they're suddenly going to cut rates? And for me personally, the answer is no. They're going to leave them there for 3 to 6 months. They're going to want to prove that inflation has been tamed. They don't want to risk the chance of cutting rates too early and inflation coming back. I think this inflation has scared them. I could do another show about why we haven't seen inflation over 2 decades, but let's not start on that one. But let's deal with what we've got today. But that's my personal view. So I think there are more rate increases to come, and then it's just going to sort of flatline at those rates for 6 months or more. So you could be in towards the end of 2023 or even 2024 before there's even a consideration of a change of policy.
Now, with the raising of the rates projected to go in, the rate hikes continue to go into, let's say, Q1 or Q2 of next year, and then let's say they keep the rates there for 6 months. Is that enough time for them to determine that inflation is under control? Because right now, inflation is at 8% plus, right? So do we have enough time to bring that back down to 2% in the next year? It doesn't seem feasible, because like you said, just like they're not going to bring the rates back down, it doesn't seem to me that inflation is going to be tamed that quickly as well.
No, and of course, you've got 8%, we've got 10% in Europe. So we're even worse off. But it really is down to all this supply. I mean, at the moment, you've still got China with lockdowns. I mean, there's something like 210 million people locked down at the moment. And of course, the weekend and towards the end of last week, when the markets had the little spike, especially commodities, was because there was rumours going around that they was actually going to ease their zero COVID policy. But over the weekend, that was denied. They're so deep into it. Well, I suppose what they may do is open up and allow more people to come into the country, because they want that foreign investment. But they're still going to have to control that. I saw a picture, I was reading something about they've got these almost like detention centres for the visitors that come in to check them over before they're allowed into the country to make sure that they don't have COVID. So I don't know whether there's going to be sort of a compulsory period before they're allowed to sort of just circulate anywhere in the country. China's difficult to gauge, and you never know what's in their mind, really.
Right, and the information coming out of China is again, it's what they allow us to know. What we don't know if that's the true situation over there. It's anybody's guess. I've seen a picture of swine flu in Asia, and there's swine flu everywhere except China. Right, of course that's not the case. Right, it's just what they're allowing out of that type of information out of the country.
Yeah, no, absolutely, and this is the problem with data. How reliable is it? But then you can say that almost about any country to a degree. I mean, it's become a lot more qualified and quantified these days than it used to be. I think the other thing with China, obviously, their real estate market has been in such a poor place for a while now. Plus the lockdowns, it's impacting internal sales, let alone outside, their exports. I mean, their exports have dropped off because, people are getting more concerned. Consumers are getting more concerned about their spending. But again, the US are in a much stronger position than the rest of the world. You look at the amount of stimulus that was put into the US over COVID, it was phenomenal. Absolute trillions from the central bank and from the government. I mean, other countries, Europe and everyone, we did stimulus, but not to the same level that you guys did. And of course, again, it's very easy just to talk about the economy and say everybody's okay because all that money was pumped in. But, you've still got the low and to a degree, the middle income earners that aren't okay. They're having to make these tough decisions on, do they fill up their car? Do they buy food? Do they heat their house? Or in the summer, did they have their aircon on? If they had any. So there's lots and lots of different sort of fundamentals to think about when we think about consumers. We can't just think about everyone that's got the money. We've got to think about the people that are on that sort of breadline almost.
For sure. And, what's interesting is you mentioned inflationary pressures, how the Fed can deal with it. At the same time, you have a government giving away money, right? And whatever the reason is, right? COVID, people needed money. They were out of jobs. Their businesses closed down. They couldn't go out. Yes. Okay. I understand that is something that, okay, we're going to try and help you. And that happened, I think 1, 2, 3, possibly 4 times. I know for 3 rounds for sure during COVID, but it seems like now our government wants to give away money for other reasons as well, which is in kind of direct competition, like you said, with what the Fed is trying to do, which is to, reduce inflation. But now you're doing things that produce inflation as a government. It's interesting times. It's interesting to see what will win out and how soon you can get inflation under control. Because I think once we get inflation under control, I think this market will be a little more, they'll get that certainty they want.
Yeah, it'll go back to economics, macroeconomics, rather than geopolitical economics and all the impact that we're seeing. Again, I just think central banks, for me personally, I just think that they are too involved in the markets. They're too active. They just need to take a bit more of a step back. It comes a case of are they the cause or the solution to a lot of these problems now?
When was in your experience, when did the Fed chairman become the Fed chairman, right? This person who has control, has more control than we've thought of, and maybe it's been that way all the time, but the media certainly has made the Fed chairperson a thing, right? A rock star, if you will. Was it Bernanke? Was it Yellen? Where was it, do you think?
Yeah, I mean, Bernanke, yeah. I mean, I can remember him, and yeah, I mean, we was fixated on everything he had to say. And we loved the press conferences and all that. And of course, you can go all the way back to Greenspan, to the fact that central banks have become so open, so transparent. In fact, they became too transparent, which was what really put Powell on the back foot at the end of last year. Because I'm sure, having seen inflation start to build up, if he hadn't have used the metrics that he put into place, they would have finished their tapering earlier. And, I mean, December is the traditional time for the Fed to change policy. And you could have even seen the first rate increase last December. And of course, that didn't actually happen until 3-4 months later.
Right. So we're off by what you would think is maybe a few months, possibly up to a year, right? I mean, we're behind, let's say. Do you see this last speech that he gave as a sign that maybe there's the beginning of a pivot, or that the 75 basis point rate hikes are done and 50 is kind of our way to ease that glide path? Or do you think there's something that could give us one more 75 basis point rate hike?
I have the feeling he's going to drop down to 50 for December. And then he's got the luxury of waiting a bit longer, get the festivities and everything out the way before he has to make that next decision on whether it's another 50 or a 25. I think the 75s are probably done now. 4 meetings, 3% increase. Now, rates of 4%. I do expect them to get to 5%, maybe 5.25%. But I think he's going to be more cautious about those extra ones because it still comes down to, what we've been discussing, the fact that it's more on the supply side than the demand. And he might need to cause a recession to sort of balance the supply and the demand. And then again, the question then becomes, how deep is that recession going to be? Is it going to be shallow? Is it going to be deep? I think for you guys, it will be shallow. I mean, the US tends to be the last in and the first out in my mind. I think Europe's in a completely different place. I think Europe's going to really struggle for a lot longer.
Well, and I think a lot of that too is their dependence on other countries for their energy source being the big one, food probably right behind it. In some of those countries, and as we see this Russia's actions in Europe, destabilizing that, you're going to have problems in Europe as far as that conflict goes on, and beyond that, of course.
Yeah, absolutely. And when you think about COVID and you think about the war. It really sort of brings home to countries how much you rely on other countries for a lot of your produce, a lot of your services.
Yeah, and I saw an interesting map of the United States at night, and there were you'd expect in New York, Chicago, LA, a lot of lights, right, with the big cities, but then in the middle of the map, you've got these bright lights, and that's natural gas being burned off. Right. Yeah. So we've got, the benefit of of our country is our energy sources are here. So there isn't a lot to transport it. You've got waterways. We can transport so many goods on the waterways, which is the easiest way to transfer goods is to put it on water. We've got these two big things helping us with the food and the energy supply. When you're Germany and you rely on Russian natural gas or Russian oil, it's a much different picture when that supply line is shut off.
Yeah, I mean, obviously the war is wrong, but I think that Europe underestimated Putin from the fact that he was fighting a war with Ukraine, and then he started to fight an economic war with Europe. One that was very difficult for Europe to win because Europe was coming out with all these sanctions, and he responded in his own natural way, which is, okay, we're just going to turn the switch off. They just built the second pipeline to send more gas through into Europe, and instead of that, they basically turned them both off, whether it just purely turned off or making excuses to why they were turned off. And then, of course, in the seabed, there was some destruction as well to one of the gas pipelines there. And nobody knows the real cause of that. But Europe is it's going to take time. That's the thing when it comes to energy. Food less, but energy much more. It's not so easy to replace supplies from one country with another country's supply because everyone's almost got their deals done going into 1, 3, 5, possibly 10 years ahead.
Right. Yeah, there's so much more. It's not like a switch you can turn on and off and just get energy from another place. Even turning on and off pipelines, right? That incurs risk, mechanical risks. Just you turn off a pipeline, you still have to maintain it. If you don't maintain it properly, things can happen. Which is what Russia fears, right? A lot of their energy comes from the permafrost. You turn that off, you don't start it up for multiple years. It's, this whole thing has disrupted a lot of stuff. We could go on and on about this, but Chris, we're running up against a hard stop. So I want to give everybody a chance for you to talk about, where they can find you if they want to continue the discussion or reach out to you. Jason, I've got a slide up here. I don't know if you can see that. Great. But if you want to talk through this, Chris, and we can go through that way.
Yeah, great. So for us, or for me especially, the industry has been so great to me. I know it's a bit of a cliche, but I do like to give back. I love sharing my knowledge. And so I do a daily newsletter, which we send out. I do a weekly YouTube, which helps prepare traders for the coming week. Take a look back at last week as well with that. The details are on there for those. I do one-day workshops where, people may already be trading, but they may just have sort of like gaps in their knowledge, or they may want to sort of learn a new skill set or maybe a new asset class even. So I can definitely help with any of those types of areas. I do a 1 week course where basically the mornings are theory, the afternoons are practical, and that really accelerates the learning process for people, especially sort of, the beginners that are coming into the industry, which, obviously I love to see all the time. And then we've got the 4 week masterclass. That doesn't have to all be taken at once. That can be spread out. And the idea of that is to give people, again, it accelerates because it gives people a chance to practice in between the weeks that are guided, spending time with me in the afternoons, where we go through all of, sort of the different trading techniques that are possible. Everyone gets to experience trading psychology firsthand as well, which is always good to see. And then sort of there's various other things we do, which is mentoring. We consult to companies to help them with their hedging needs, to manage their risk, obviously with FX and also commodity exposure. And we provide lots of educational content to exchanges and brokers. My contact details are down there. And for the company, if you've got any just general questions, info@symaxfintech.com. If you've got anything you'd like to ask me personally, then it's chris.tubby@symax-int.com.
Chris, thank you so much. It's been really educational, really fun talking to you, of course, as always. And thank you for your time. I know it's still light out here. I don't know if it's dark out where you are, but I know
it's dark now. So yep, only another month just over before we go into the shortest day. So I always look forward to that. But yeah, I mean, and again, just the markets have started to pick up yesterday and today on the back of what's going to happen with the midterm elections, and the dollar weakened as well. So it's going to be interesting to see what happens to the dollar over the next couple of days.
Yeah, for sure. And we'll be right back here at 3:15 with the bars closing. Chris, thanks again. Hope to see you soon.
Pleasure. Thank you for having me.
Have great holidays, but we'll keep in touch. And thanks to all of you for coming. Check us out at 3:15, ninjatrader.com/events for bars closing with Jim Cagnina. In the meantime, have a great trading day.